When it comes to dividends, you need to just take into account that dividends now are mainly all taxed. There is still a small allowance of tax-free dividends, which is reduced from 1,000 to 500 from April 24 onwards. But thereafter, the taxes due on the dividends remain the same as beforehand. But just as a reminder, the taxes are 8.75% for any dividends in the basic rate band, 33.75% for any dividends in the higher rate band, and 39.35% for any dividends in the additional rate band. Normally, for those clients that use the personal allowance and offset that against multiple sources of income, which could be employment income or rental or pensions, and then use the rest of the basic rate band with dividends, you'd be looking at a tax bill of around £3,255 for the year. But one of the things that always stings our clients, and you need to consider, is that if you have a tax bill of more than £1,000, and that's not all taxed at source, that HMRC will ask for payments on account. This means that you'll need to pay an extra 50% of your tax liability in addition to the other tax you'll pay as your balancing payment, and you'll make that 50% advance payment in January, but you'll also make the other 50% payment in July. As the tax year ends, we'll start to now focus on P11Ds and also the self-assessments for the 24-25 tax year. So you'll just need to keep an eye out for our questionnaires as and when they come to you. But if you complete those questionnaires quickly, we'll be able to come back and send you across the draft figures so you can understand your tax liabilities and make sure then that you've got the funds to make the payments.